the hot new car rides from the auto show and a tweet that made one trader millions. That's ahead with our panel. But first, the March employment report comes out tomorrow. Even though the markets are closed, Fox Business is here. David and I will be here. What type of reaction could we see Monday, and what should investors expect? We bring in our panel, Thom Fross of Fross & Fross Wealth Management, along with Bob Rice of Tangent Capital. Right off the bat, gentlemen, here's what we're expecting: 245,000 jobs for the month of March. Unemployment holding at 5.5%.
Yeah.
What are you expecting?
I don't think that those headline numbers mean all that much. What really matters the most is what's wage growth look like, what's the job participation look like. These are the things that really drive the economy. What's full-time versus part-time look like. The headline number really can be disorienting, and it's not what the Fed is looking at as they determine whether there is slack that's going to allow them to extend easy money policies.
But, Thom, if we get a better than expected number and wage growth, the expectation is for it to grow about 0.2%. If that beats, what kind of reaction could we see? Very positive on Monday, correct?
Well, I think so, and we are expecting that number to come in there. But what it's going to do is put more pressure on the Fed and Janet Yellen to have to think about raising rates. So while I think the equity markets might respond positively at the beginning, I think we're going to closely be watching the bond market. Because if the bond market feels that interest rates are going to rise, then we're going to see a big sell-off in fixed income.
Okay, and these interest rates are so unbelievably low for both the 10 and the 30. But just quickly on this jobs number, Bob, when you think of the trend, the trend has been so unbelievably strong, month after month after month. When I say, see, you're questioning that.
I'm not sure I'd go unbelievably strong. I'd say decent.
I'd say decent. 19-year levels that we haven't seen.
Well, you're also seeing jobs, the participation rate at 30-year lows at the same time.
That is another part of this
So that's
equation.
the flip side of that. That's very important. How many people are actually working? That's not a very good percentage of the U.S. population.
Well, whoever is working, they're buying cars because the auto numbers, again, the trend is showing month over month, not necessarily so great for the most recent month, but many automakers are so excited that they are debuting their hottest and flashiest vehicles this time at the New York Auto Show this year. Between Jaguar's swanky XF sedan, the new Cadillac CT6, and the redesigned Chevy Malibu, just to name a few. But which automakers, because you could invest in these, might rev investors' engines? Thom, which ones?
Well, I particularly like that Jaguar XF as well, and I was also enamored with the Range Rover, that new autobiography edition, $199,450. So obviously these automakers know something, that they're expecting the consumer to continue to spend more money.
And
that's obvious.
That's Tata Motors. Of course, there's Hyundai, there's Ford, there's General Motors, Toyota, Honda. What do you think, Bob? Is there a favorite in there for a guy who hates cars and doesn't drive? He hates cars.
I have to admit, I really don't like them so much. And I don't mean to be a downer, but I'm just not a big lover of the automotive industry in general. I think that slackening that you've seen in the pace is going to continue for a while. I think there's some mega trends running against them. Not a sector I really like right now. Notwithstanding the fact, it's not because I just don't like cars.
Well, I personally looked at the brand new Jeep Wrangler that's going to be coming out. I personally, I think Jeeps are really cool, but that of course, the Fiat Chrysler, this is a company that's actually been doing pretty well with the reissuance of the stock. Okay, speaking of doing well, one trader made more than $2 million in the blink of an eye. I mean, even faster than that, by purchasing stock options of a tech company called Altera right after a reporter tweeted that the company might be in talks with Intel about a potential buyout. Good timing, skill, or something else? Thom Fross.
Well, first of all, let's be really clear about this. It does not appear that it was insider trading because it was public information once that Wall Street Journal that reporter tweeted that. But let's not forget the point that we're only talking about this because this trader made $2.4 million. He did put $110,000 of his own money down that he could very well have lost. We wouldn't even be having this discussion right now.
It was a nanosecond after the Journal tweeted this, Bob. I'm sure it will be looked at, but there is such thing as lucky timing.
Well, there's also such things as automated intelligent trading, where you've got a lot of people spend a lot of money on systems that will read tweets, read news, interpret them, natural language recognition, and execute a trade right away. That actually might account for the millisecond timing right there.
They will sift through these tweets, they will aggregate them, and they will grab the ones that matter to you, and you've already been positioned to actually say buy this or sell that.
Exactly, and humans literally cannot read fast enough to keep up. It's another reason that the market becomes tougher and tougher for the average Joe to play.
Although everybody can go on Twitter. Quickly, Thom?
That's right. We all could have filed that same tweet. And these computer programs are looking for words like merger or buyout or something like that to quickly act. But hey, listen, we all, if it shows you, maybe we all should be part of Twitter. I know we tweet for our clients constantly.
Thom, great to see you. Bob, thank you so much. Have
Good
a
to see you,
lovely
Liz.
holiday, both of you.
Thank you.